And welcome. This is Mary Ellen McGonagle with the MEM Edge Show, brought to you each and every Friday afternoon. This is where we put you in front of where the action is in the broader markets. And of course, we've entered a new paradigm universe where the markets are struggling. So we have quite a bit to cover. As always, it's with an eye toward not only helping you be fully informed as to where the markets are currently, but also where the markets may be headed. And let's go ahead and take a look at what we are going to be covering today. We will go ahead and do a really close-up view of the current markets. Where are we now, in addition to what to be on the lookout going forward. Also, stocks that are seeing growth in the face of coronavirus spreading, and that is a number of areas. I will walk you through that both visually as well as individual stock ideas and names that are bucking this severe downtrend in the broader markets. We're also going to take a look at how, if you are interested, you could play the pullback in volatility. We've had quite a rally this week, up about 10% for the S&P 500. And as such, we did see a pullback from that really high spike in volatility. A couple of simple ways, if you are inclined. My anticipation is that we will see volatility. It's alive and well, so that could be something to take a look at. Using history as our guide, this is where we are going to go back, take a quick look at a previous bear market period to give you a sense of what may very well occur going forward here. Now, what I did want to do is quite simply share with you a couple of ways that you can very easily get in front of stocks on the move on a daily basis. And what I wanted to share with you were some views that I saved from earlier in the week. So what we are looking at here is a 2-day candle glance chart. These are this list of stocks was originated from looking at Tuesday's very sharp rally, and these particular stocks on the S&P 500 were up the most. So from there, what you can do, and I'll show you how, you can on StockChartscom get a thumbnail shot. And for my work, I wanted to just see a 2-day chart from the Tuesday rally. And again, I'm going to progress and take us through the week and give you an idea of really just how volatile we are. But on that Tuesday sharp rally, some of your biggest movers were, for instance, this is Norwegian Cruise, NCHL, American Airlines. So we can see a lot of these DRI, or restaurant stock, these beaten down names. MGM is a resort, so travel, leisure. We saw this super big bounce in a number of those stocks. One thing you could have paid attention to, and you can do this going forward next week, is on that Tuesday sharp rally, take a look at a name that is defensive, areas that are viewed as defensive that rallied. This is Freeport McMoran. We did see a move into gold stocks. But more importantly, I'm going to take us through the week. This is Tuesday into Wednesday. And then more recently, this is the last 2 days, the action in that exact same list. So for instance, Norwegian, we did see a continuation rally into the close yesterday. That was a nice significant gain. But today the stock is down 20%. And moving along with airlines, we can see they did have a continuation rally into Thursday, but again, another area that had a significant drop, down about 6% today. But just kind of walking you through the week, taking a look at these areas that have these one-day advances. So I'm going to share with you very quickly before we advance any further as to how you can get in front of that. When you're using StockCharts.com, just go ahead to this first interface page. And I want to see, in this case, those stocks that are up the most. You can also sort it by percent most active, and then go ahead and get that candle glance view. This is a longer term view. You can also ask for, this is a 2-month view. You can ask for a 2-day view. So that's a quick sidebar note for you that are, those of you that are actively trading the markets. And also wanted to announce that I will be starting a live day trading online trading area. I'll talk about more about that at the end. Let's dig in now because we want to see where the markets are currently, get a feel for where we may be headed. So this is the S&P 500. We're looking at a daily price chart, and we can see this is that significant fall off that we've seen. Some would call this a waterfall. And so this particular week, we talked about the advance out of this super oversold area. So from my work, I can see that we've broken back above this shorter term 10-day simple moving average. This blue line is your 21-day, another shorter term simple moving average. And I'm viewing that as the next possible area of resistance. We can see the RSI on the daily, not quite positive, and then moving down, moving average, convergence, divergence. This is another momentum indicator, and it can be really quite helpful in alerting you to a potential early signal for shifts. And we can see this black line up through the red is telling us that for the near term, we're looking at a daily price chart, that the market averages, the S&P in this case, could be reversing its downtrend. Now, of course, ideally, we want that MACD to be up here in positive territory before we would be all in on the markets. But this is interesting. So we're getting somewhat mixed signals. Super short term, we could see a continuation rally. But bigger picture, not quite out of the woods yet. So let's move on from here, take a longer term view. This is a weekly view of the S&P 500. And so when you're looking, as you're broadening out from daily to weekly and even monthly, the longer term the chart that you're referencing, the longer term the outlook that chart can provide for you. So we're looking at a weekly on the S&P 500. This 2018 low was a line in the sand for quite some time because a break below that was viewed as a drop below support. We did break below that yesterday, but we were able to bounce above it certainly today. So it's going to be interesting to see where we close on the week because this is that 2346 level. So we currently are at 2541, well above that. So another signal that we are potentially entering a super short-term potential bounce. This RSI oversold. For those of you that follow my work closely, and I'm going to talk about this in more detail with my MEM Edge bi-weekly report that you can trial at a nominal fee. But this RSI in an oversold position is really highly relevant, very unusual occurrence. So we are seeing potential signs. Are we turning? We do have more work to do before we get fully constructive, but certainly near term, you could make the case. Now, let's take a minute while we're here and take a look at another bear market period. I talked about using history as your guide. I talked about this also in an article on StockCharts.com earlier this week, and really examining the daily price action of the 2008 bear market. And in that case, it was referencing these really sharp rallies, these, and also down days. So down here in this '08, in the rather more beginning stages of the bear market, we were seeing 11% rally days. 2 of them, we also saw declines of the same amount, 10.5%. So big, wide, loose swings, a lot of uncertainty, a lot of fear that's being shown in the markets. And we are still seeing those wide, loose daily price actions currently. So another characteristic that you can keep your eye out on or look out for is a bit of a tightening up in these trading ranges, and then eventually on the lookout for a reversal of the bear market. So that is a view of the S&P 500. Let's go ahead and take a minute, take a look at some of these sectors. Where are we standing? as it relates to the underlying groupings among the S&P 500. So this is a candle glance view of the 11 sectors in the S&P 500 as well as the S&P. So what I've done is added an RSI indicator. You can add an indicator of your choice. Sorted it in descending order. I want to see where the relative outperformance is at this point in time. So we can see certainly defensive areas up here in the forefront. That would be XLU, utilities, XLV healthcare, XLP staples, as well as real estate. So you would expect this certainly in a bear market environment. But take a look at this outlier. This is XLK technology, and this has everything to do with a shift, certainly within really globally, as workers are migrating. They're mandated to into what's called lockdown, and they have a need for technology to stay connected. So this is actually an area that can be viewed, certainly particular areas in tech that can be defensive. So we're going to take a look at some of the hot spots in each of these 4 areas up here in the forefront as we move forward. One other area that we can take, or one other view on these S&P sectors, and I'm super visual, as I know a lot of you chart watchers are as well. So I like to see a different view. This is also from StockCharts, and it is a bar chart taking us back to that peak. This is from February 19th to the 26th. And what I wanted to see in this bar chart was where is the relative outperformance. And this is going to confirm what we just saw earlier. This is consumer staples up 6%, healthcare 6% as well. Technology almost 3%. So these are your 3 outliers. Also, we talked about gold, so we can see that materials are down certainly quite a bit less than the broader markets. So let's go ahead. We are going to take a very brief break. When we get back, I'm going to share with you those pockets of strengths, how you, if you are inclined to trade this market, can take advantage of that, and so much more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm sharing with you another what's called candle glance view. Prior, we just looked at the sectors. In this case, we are looking at each of the broader market indices. That would be the NASDAQ, the Dow, the S&P, the Russell 2000, and then also I've overlaid some individual groupings. We're going to be looking at gold, volatility, the semiconductor grouping, as well as software. IGV is the ticker symbol there. These are 2 bright spots among technology, all about that connectivity that I mentioned to you. Also, I put MCHI, that is China's broader market. So there are some that feel that we can look to China as a guide because they have recently emerged, certainly from the worst of their coronavirus spread. So again, that RSI indicator, strength to weakness. So we can see that volatility is remaining high. I'm going to go ahead and blow this up just to share with you that concept of that pullback and sense that it's certainly off of its peak, but it is at 65. So volatility is still super high by any standard. And that again is the fear index. So despite the rally attempt this week, there is enough fear to keep the daily price swings currently in place. So from here, we can take a look at another area of strength, gold. For those of you that are gold bugs, so to speak, there certainly are ETF plays, and hopefully we'll have time to get into that. Biotech up here in the forefront, and you can imagine there are some main players in this group. I've identified them in my MEM Edge report, but we are going to get to a couple of other smaller names that are really holding up quite well in the current environment as we rage against coronavirus. Semiconductors, I talked to you about that area, as well as software. Take a look. These are two of the very few areas that have broken back up above this 21-day simple moving average. Actually, that chart is not as telling. Let's go ahead back, because in this these shorter term, smaller charts, we do have the 20-day simple moving average, and we can see that it's broken above, as well as the IGV. So blue is your 20, the red line is your 50. So this is very constructive. It'll be interesting to see if we can close the week above, but it is showing superior strength with that break above that shorter term simple moving average. Take a quick look here at China. They did very briefly break back above this shorter term, in this case, green 10-day simple moving average, and I'm not quite prepared to, let's just 21. But what I wanted to share with you was this sharp V-shaped recovery in China's ETF MCHI. Today it did drop 5% because the Q1 outlook was reduced. And certainly the US has that risk factor as we enter into earnings season next month. So moving right along, we can see the NASDAQ down here. It is of the broader industry indices the strongest, because we can see it's above the Dow, the S&P, and the small cap. So that's a view broken down further into the markets as far as where we are seeing outperformance relative. And from here, what we can go ahead and do is take a look at some of these areas that I mentioned to you and how you can potentially take advantage. Again, if you're inclined, you have a confidence in your trading ability. So what we are looking at here is a view of the 11 sectors in the S&P, and quite simply, we're looking at those sorted by performance. I want to start here by taking a look at consumer discretionary, and we can see it's a rather highly populated area. Some of these bigger movers this week were in recreational services, and I did point that out to you in the beginning with some of these cruise lines. We can take a quick look, but it is with an eye toward knowing the volatility that you would be entering into with these stocks. Again, with that live trading room that I intend to start next week, we would be able to really drill down into some of these shorter term charts to take advantage of these upswings, and then have your exit plan when it drops. But these moves are rather significant, so it's not for the faint of heart. But let's go back to consumer staples, because there are areas among this sector that are more staid, large cap. They have growth components among them that are sustainable. And that's going to be of more interest, certainly to me, as it relates to bigger picture. So here we're looking at, among the sector, durable household products. And what we can do from here is take a look at some of these other underlying areas. And actually, this is not precisely where I want it to start, but it doesn't mean that we can't take a look at some of these underlying stocks that are finding traction. I like to do the higher SCTR, because these are going to be stocks that generally are going to have a bit more as far as companies that are well founded. And this is HELE, again, that V-shaped type of recovery. What they're finding is a big pickup in makeup stocks, surprisingly, as this lockdown has individuals experimenting with makeups, a lot of online, you're doing online conferencing, online staying socially connected. So we've seen a pickup in some of these makeup stocks. Let's go back and take a look because there were other areas that I did want to dig into among the consumer staples area. And I'm trying to find where we can kind of dig in, but really what we are seeing is a pickup. There are some very large cap, heavy weight stocks, Walmart among them, but this was not one of the stocks that I did want to point out. Let me take just a second here and get into this area so we can take a look because there are definite shifts that are occurring among consumers that is expected to potentially last. Now, these are not your prettiest charts, but this is Procter and Gamble. Honestly, I am going to move on because from this chart, it is not certainly one of the more attractive. But let's take a look at Pepsi. This, of course, consumer staples in the soft drink area. And what they are studies are finding, and actually the CEO of Target did talk preliminarily, oh my goodness, about where their sales are emanating from. And it is all about food and beverage. 50% year-over-year March increase in food and beverage. People are really stocking up on snacks. They're finding that healthcare is going out the window. Pepsi would be one of those types of stocks. They were upgraded by Wall Street analysts this week, and they offer a nice 3.1% yield. But this again is that same V-shaped recovery. I talked about the potential rally up to that 21-day simple moving average. I'm going to stick with this view because we can see here it did rally right up to that blue 21-day, was met with resistance. And this very well could be the case. Something I'm anticipating, rallies up to that 21 could easily be held back. Another beverage stock, Coca-Cola, KO. And this stock is a 3.7% yielder, but not quite as vibrant. Pepsi, from my understanding, Coke is more global, international, and their sales in some of those areas are languishing, where Pepsi is not. Some other area that another stock within this group that we can take a quick look at is Hormel Foods. But again, each of these charts really are not super attractive. What I'm doing here quite simply is pointing out to you outperformers. We can take a look at one other name that really was an early adopter and came in strong. This is Kroger. They also they are a food purveyor as far as providing, similar to Walmart and other areas, and a food retailer. They hit a new high, but take a look. They really fell out of bed this week, and this is that volatility that you can anticipate. Certainly a stock charging to new highs, such as this, you would expect profit taking, but they've come out with good news since then as far as hiring workers, expanding hours, and so forth. So we may see a move back into that stock. And one other area that is also getting news for significant increases in sales, and that's alcoholic beverages. Certainly with restaurants and bars closing, we will see individuals seeking their beverage of choice elsewhere. This is SAM, Boston Beer, SAM. And this particular company has a popular seltzer, hard seltzer drink, White Claw. And so we can see that it did not sell off quite as much as the markets, and it is attempting to reverse, broke above its shorter term simple moving average, but found resistance at this 50-day. So a little more work needed there. Let's go ahead and move into, I mentioned to you, healthcare and some of the traction and innovative areas among biotechs that are really holding up well. So I'm going to share with you some of these smaller companies. Not all of them are going to have earnings, but they certainly are worth noting. HTXX. Sorry, let's go ahead back here. HTXS. And this particular stock is a biotech name that is in the forefront as far as, I apologize for this, because they have a stem cell kit that is on the front line as far as now being used for coronavirus. So again, a bit of a sloppy chart. We can see from here, you will want to drill down to a lower time frame. This is a 1 hour chart using these simple moving averages and other metrics. But this particular stock or particular company does have a stem cell therapy for acute respiratory distress, and they are currently being utilized. We can look at another medical stock that is also in the forefront, and that is QDEL. And this particular stock, we can pull it up here, you'll see that it has been relatively outperforming of late here. This is, in fact, today, it gapped up close to new highs, really holding in remarkably well. We can also take a look at another healthcare stock that is not in the coronavirus space, but has really been doing remarkably well. They are all about immunotherapy for cancer. So what I did want to point out is, in addition to coronavirus stocks, we are seeing considerable traction in cancer-related therapy drugs, and that is viewed as defensive with the sense that regardless of the economic backdrop, there will be continued demand for these products. Let's move over to software. I'm kind of running low on time because we talked about that being a very vibrant area. The first stock we're looking at here is Teladoc, TDOC. They provide software that allows medical professionals to interact remotely with clients, or yes, with individuals that need medical advice. So that is certainly interesting. And there is a smaller cap stock within that area that's kind of catching up. And if I can get the ticker, but let's move on, because this stock is going to be more interesting. And this is Zoom. And these guys, for those of you not familiar, they provide teleconferencing. They also allow people to interact just one-on-one or two groups together. It doesn't have to be business related. So they're all about connectivity. And this stock really has seen explosive growth, and it's a wonderful stock. More recently, we've seen hacking taking place, where coronavirus, they are hacking into computers by playing on that fear among coronavirus. What you can do from here is take a look at HACK. That is cybersecurity, but CHKP is a stock within this group. This is Checkpoint Technologies that I would say keep it on your radar screen. And then certainly one other area that we can take a look at are other areas that are helping as far as keeping people connected, and that would be LLNW. This is Limelight. And this particular company, they operate private networks globally. So if you're binge watching or binge playing video games, this is the type of network that you would want to utilize. And then I talked about this concept that people are loading up their snack pantries, putting the health concept out the door. There was an upgrade this week. Thought you might get a kick out of it. It's Weight Watchers. So analysts are anticipating that when coronavirus has passed sufficiently, people will be significantly out of shape with closed gyms and so forth. So this is WW. Weight Watchers broke up above this 10-day simple moving average in an attempt to reverse. And so we can take a look at Weight Watchers and certainly other areas within this marketplace, as there's anticipation that they will see a pent-up demand for their services. So for those of you that are actively trading the markets, I urge you to take a look at my MEM Edge biweekly report. I put out an alert each day for this week. Keeps you on top of the markets, as well as setups that are out there. And then my live trading room. Go ahead to MEM Investment Research, contact us, and drop your email. I will go ahead and inform you of the details. It's at no cost. It's a way to keep people within a community on top of the markets as well as stocks. Have a great weekend.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.